All right, guys, NVIDIA just reported. If you can't tell right here from this number, they did very well. They were expected to make 92 cents per share, and they reported $1.09. And they were expected to have revenue of $6.5 billion. They reported $7.1. Now, keep in mind, both those numbers are still down from last year's same quarter, but they still crushed. NVIDIA has been on a tear. 52-week low of 108 just 7 months ago. It's back at the 338 after the surge. Guys, in full disclosure, I have shorts in NVIDIA. I'm getting crushed right now. I haven't looked at what it is, but I'm getting crushed. NVIDIA's all-time high is 346, and it's coming close to that. And that was in November of 2021. Listen, we don't really care much about reported earnings in the sense of making or breaking our thesis. The thesis is what it is. If you look back at history on companies, they don't always beat, and that's okay because we still want to buy good companies at good prices, and sometimes they beat and sometimes they don't. But as long as in the long run, they hit the metrics in which we have assumed, we can make a lot of money, right, Mo? Mm-hmm. Mo's looking at their press release.
Quarterly revenue up 19% from the previous quarter.
Not the previous year's same quarter, though. Yeah. Year over year, their revenue was still down. Because if we look at this, let's go to the income statement in our software. Let's go to quarterly. And that would be 8.29 was the same quarter last year. And they just reported 7.19. And EPS last year was $1.12. I don't know if that's right. But either way, NVIDIA crushed it. Everyone loves NVIDIA. They're now up to an all-time high.
Oh, they hit it.
They hit the all-time high,
said,
guys.
Is it possible? I said, of course it's possible.
They just hit an all-time high, guys. All-time high. You just, while we're recording this video, all-time high.
Listen to this.
Tomorrow's going to be bad for me.
NVIDIA's outlook for the second quarter of fiscal 2024 is revenue expected of $11 billion.
Holy cow.
Yeah. That's insane.
Wow.
That's insane.
Wow. Which is what? Almost, 6.7. Yeah, that's crazy.
That's crazy. They just did 7.19.
Wow. First quarter revenue was for data center. Mm-hmm. Okay, so let's take a look at this company. Are there any, is AI the big thing?
So there's a lot of things that I saw on Twitter. People are doing an over-under of how many times they say AI on the earnings call.
What's that number going to be, you think?
I don't know. I mean, AI, let's see. How long is an earnings call? Let's call it 30 minutes. I say 24 times.
24? No way. More than that.
You think it's going to be more?
I'll take over.
Okay.
I'll take over.
He said 70.
I won't take over 70, but I'll take over 24.
Let's write that down. 24 and 70. You got to give a number. Give us a number.
70 plus 24 is 94. 47 is right in the middle.
47. All right.
I think it's going to be over 50.
50 plus?
I'll say 55. My number is 55.
All right. Sounds good.
So what is the bet?
Pride? I don't know.
So is it whoever gets closer
to the number, period.
In percentages?
You can go over, you can get, yeah.
In percentage?
No, numbers.
Okay, sounds good.
All right.
I like 55.
All right.
So, let's take a look at analyst estimates. They're expected to do $27.5 billion this year in revenue. Does that sound right? Considering how they crushed it? Man, look at these EPS growth. Look at this EPS. Guys, here's the thing, though. They're expected in 2028 to make $13 a share, according to analysts who are probably very pro NVIDIA. 13 times even 20 is $260 a share. So it's selling for how much? Right now, the stock's at $350. It's currently selling for 26 times 5 years from now earnings. I mean, again, if you believe every investment's the present value of all future cash flow, you have to at some point question that. Now, are they going to crush that? They could very well crush this number. These analysts could be very far behind, and all of a sudden AI changed everything.
Looking at this, the PE is 180. The 5-year PE is 147. That's expensive.
Yeah. What did they do in net income this quarter?
Let's see here. I'm going to go to the press release.
Because $2 billion, $2.5 billion. Is that what it was?
Let's see here.
Gross net income, $2 billion.
Yep, $2 billion.
Okay.
Amazing.
Okay. Where's the 11 billion number for the second quarter? Where was that again?
It was up here.
Scroll down.
Second quarter fiscal outlook of 11 billion.
Oh.
Yep.
Okay.
It was, yep.
All right.
And it's in their outlook section right
Look at their 8 pillars here. Increased shares outstanding, not by much, 4%. I don't blame them. I'd be selling everything. So PE, 5-year PE 147, 5-year price of free cash flow 155. So they're, just to get back to normal levels, their their price has got to fall a ton, or their free cash flow has got to go up by 7x. It's possible. And again, we've been in this position before. I get back to my days of Amazon when I thought, what is going on with Amazon? It made no sense. It made absolutely no sense.
I mean, maybe if AI takes off the way everybody's saying with NVIDIA, maybe it happens.
Now, the interesting part is I shorted NVIDIA with options, which means even if NVIDIA stays at 340, I could still make money, because my bets are if they go to like 380, 390 or higher, then I start losing money overall. Right. But based on where it is today and how far out my outlook is for NVIDIA, it'll be pretty, it's got to take some time. It's going to be pretty bad tomorrow. But again, if I believe in my thesis, look at this V chart. Look at Mo's screen right here. Look at that. Look at that absolute collapse and rebound.
That's wild.
Crust.
Yeah.
That's insane, Mo. Really high return on invested capital. Listen, this is a great business that I want to own at some point. Mo, look at this. Market cap of 750.
I saw 757.
Enterprise value of 757. Guys, what this means is the difference between the market cap and the enterprise value is essentially the debt. They got no debt. Look at their average 5-year free cash flow, the $5 billion. Wow. Wow, wow, wow. Man. Their 5-year profit margin's down. Their profit margin last year is down from the last 5 years.
One thing that does get me is looking at that revenue jump that they did in 2020. I mean, they went from 12 billion to 19 billion to 30 billion, and now it's 25 billion in 2000. So,
and what do they expect to do for the year, though? Is there any guidance for the year? Look at that press release. I want to see what the guidance is for the year.
All right.
For revenue.
This is outlook, so let me scroll down more and see if they're guiding for the full year. They might say it on their call later.
So that's the big thing.
Because I don't see any year, what is this? No.
Nope. That's the actual. Okay.
Right.
Let's go to our stock analyzer tool. Now, guys, if you're new to the channel, our stock analyzer tool is what we use, not including the balance sheet, to project out revenue and profit and then create a multiple and a discounted cash flow, essentially, of what's that worth to us today. At the very bottom, you pick your return you want, and it'll pump out based on your assumptions here, low, middle, and high, what price you should pay based on every column. All right? Very simple, very popular in our subscription group. If you want to get the software to be able to do this, it is so valuable to you to make better financial decisions and look at companies as the present value of all future cash flow. If you look at NVIDIA as merely a stock going up or down, this is not for you. We're not the channel for you, and that's okay. But if you look at every investment as the present value of all future cash flow, and if you believe that it's possible to overpay for a good thing, we're the channel for you, the software is for you. If you don't believe that, there are a bunch of other financial shysters out there you can probably go to get yourself feel really warm and fuzzy because a cool company keeps going up in price. That's it, right, Mo?
Yep, absolutely.
All right, so Mo, why don't you do a 10-year analysis? I'll do 20.
Okay.
Let's see here.
I'm going to do a wide range. I'm just telling everybody.
I have to do a wide range. Let's go this way. Let's go with... Okay. So this is the hard part of investing is when you see a PE of 180 and a price of free cash flow of 180, how do you go back down to double digits? Because people will sit there and say, wait a second, that's too conservative. So guys, what I mean by that is like, look at our PE right now. The trailing 12 months, not including this quarter, it's 180 and 180 for price of free cash flow. A moron like me, Kevin, looks at a 200 PE and says, well, discount is 70. No, you look at historical average PE of 15 and you go from there and you give more for high ROIC businesses, which NVIDIA is, and high growth potential, which it is. But what's that reasonable number? Is it 30? Is it 25? Warren Buffett paid 30 for Coke, 30 PE for Coke in 1987. So who knows? So I put my numbers in. I put 5, 10, and 15%. Mo, what'd you put in?
I did 8, 14, and 22.
Okay.
Next decade.
Profit margin, I did 18, 23, and 28.
16, 21, 26.
Okay, so a little bit lower than mine. Free cash flow margin. I did the same thing.
Same thing, 16, 21, 26.
Okay, what'd you do for PE?
18, 22, and 26.
I did 16, 19, and 22.
Well, my thing was if they could do 22% revenue growth with margins that they've done for the last 5 years, okay.
They're going to own that market. Yeah. I don't blame you.
Yeah.
And what'd you do for your desired return?
11, 13, and 15.
I did 10, 12, and 14. I remember, guys, Mo did 10 years. I did 20 years. So my numbers and the growth levels should be lower than his because it's harder to grow as time goes on. Hit the analyze button. Guys, I have a low of 34, a high of 135, a middle price of 70. Mo, what do you have?
I have 35 on the low, 158 on the high, 72 in the middle, watch list priced at 80.
So let me show you what, based on this, stay on the chat, stay on this video because I want you to understand what it'll actually take in order to justify this value on the high side. I'm going to assume all my high assumptions. But what revenue growth do I need to justify that for 20 years? Let's go 20% revenue growth. Still not there. 25% revenue growth. All right, we're there. Okay, so it's not that high. 22% revenue growth. Basically, 22% revenue growth you need for the next 20 years. Keep in mind, 22% revenue growth for 20 years. That's 53 times. And what did they do last year? 25 billion. They need to be a $1.3 trillion revenue company in 20 years. Everything has to go great.
Yeah.
Let me explain something to you. I believe I read in a book, I think it was in 100 Baggers, that it's like no company has ever done like double digit for 20 years in a row.
It's very,
I don't know if that's true or not. I don't remember. That doesn't sound right. But if you think about it, to grow 50 times in 20 years for a company that's already doing 25 billion in revenue, that's a very tough task.
For me, they have to do 28%, assuming my high end, and I drop my margin of safety to 0.
And 28% for 10 years?
28% for 10 years.
Guys, what large companies, I mean, listen, at the end of the day, guys, I understand you're probably looking at us the same way people looked at us 2 years ago when we said, Tattooed Chef, Nikola, Workhorse, all these idiot companies were terrible. Peloton, we said avoid them, Palantir, and guess what? Look what happened to them. Is NVIDIA a bubble? The problem I have is everybody thinks NVIDIA is a bubble. That word concerns me. And look at this, Mo.
I know.
We're at 358.
Yeah.
Guys, I want everybody to pray for me because tomorrow's going to be a rough day for me. There's going to be a lot of red in my portfolio tomorrow. So do I have the balls to short more tomorrow?
I mean, this would make me do it.
All right, guys, that's where we stand. Thank you very much for your time. Everythingmoney.com. Subscribe to the software, $1 per day. This is incredible.
This really is.
This is incredible. So thanks, guys. Appreciate it. Bye.